Well, thank you for the kind introduction. A small correction. Just the first ICO from India was Wandex.
Okay.
The first ICO in the world was Omni Mastercoin.
Oh, all right.
Done by a friend of mine called Jar Willett. But we did the first ICO in almost everywhere, Canada, Finland, Singapore. So I'm happy to be here, as always, in Singapore, speaking about something that's upcoming. Do we have the slides? So it's a grand welcome to the UCIM guys from India. They reached out to me saying that they want to come here and conduct an event. So I put a lot of my network and my connections behind them. So a lot of speakers are my friends, and happy to see you in Singapore, which has now become the center of the crypto world. I'm very sort of proud that a lot of good, smart Indian guys are coming here to do events. So my talk today is on this change in the crypto scene, how the crypto industry is moving from utility tokens, which are slowly dying out, right, into something that's new, which is called security token offerings, and how it is going to solve some of the problems of the crypto industry. So this is the Gartner hype cycle, right? So which basically talks about how every technology goes through a cycle, right? So initially there's a lot of hype, and the hype is created to attract a lot of capital, right? Without hype, it's very difficult to attract capital. So there's a lot of peak of inflated expectations, right? I mean, people overhype everything and then realize that there is actually very little or very limited value to that particular technology. And then the technology matures and actually becomes of some value, like we see, right? I mean, Ethereum's on free fall, Bitcoin is on free fall. You're seeing a massive free fall in the crypto industry where billions of dollars are being lost every single day as we are speaking. And this is a good representation of what is happening, right? I mean, but it's also important to philosophize, to really understand what is happening, right? So when I see the crypto industry, I see, can we go full screen? Can you do full screen? Perfect. So I see the crypto world. I've seen this for literally close to a decade, being part of the P2P Foundation. So if you Google Satoshi Nakamoto on your phone, the first link that you'll see is a Wikipedia link. And if you click the Wikipedia link, Wikipedia will tell you the only place Satoshi has a website is the P2P Foundation. And then if you search for P2P Foundation ambassadors on Google, I'm one of the ambassadors. So we've literally seen this evolve over the last decade. And this is a very beautiful representation of the crypto evolution. Different forms of energy vibrate at different rates, like a river. Energy flows from higher to lower levels, moving through repeated cycles, expanding, then contracting, like our breathing. Since everything in the universe is a form of energy, everything falls within the domain of the laws of cycles. Sunrise and sunset, the waxing and waning of the moon, the ebb and flow of the tides, and reminds us there is a time for everything under the sun. All things rise and all things fall. So this is a very important lesson, right? So what we've seen so far is this greed. This is a picture from Wall Street, right? Greed is good, or whatever is the slogan, right? So we've seen madness play out over the last 4 years. We see things like Golem that raised $8.6 million in 29 minutes. We saw Basic Attention Token raise $35 million in 24 seconds. We saw Telegram raise 1.7 billion. We saw UOS raise $4 billion, right? There's hardly a product out. There are hardly applications that are out being deployed, right? So, but they've raised billions of dollars. There was this token. How many of you know about the DNT token here? Can I see a raise of hands? Nobody? So DNT token was called the Do Nothing token. A bunch of guys didn't want to do anything, and they wanted to create a token, right, for them to do nothing. So this is how mad things were in the crypto world. The Do Nothing token. It doesn't get madder than this. So, and we saw memes like this, right? The revolution has begun, right? So, and the boom happened for a good reason, because it gave investors an opportunity to invest into projects which was only preview to private institutional investors like hedge funds, private equity players. So suddenly the whole market opened up, and everybody could get into some of these deals, and and also for traditional investors like venture capitalists, private equity players, there's no liquidity. It takes 10 years to list a token on an exchange. 95% of the companies, startup companies, fail. So there was no liquidity. So the ICO was a great opportunity in the old world. I call this the old world because it's a token world. right, for investors like this. But 800 cryptocurrencies are now dead. 800 currencies are dead, right? Bitcoin is now, this was 2 months ago. I did the first presentation 2 months ago. So the second time I'm presenting it. Right, so Bitcoin's lost almost 80% of its value now, right? I mean, it's gone, it's 3,900 or something today. Right, so total market capitalization has fallen dramatically. Total market capitalization of all tokens excluding Bitcoin, right? It's gone down almost like 70-80%. So this was the madness. Tim Draper's son, who spoke today morning, I have no product, I'm raising $40 million. VC, I'm not interested. Company, but it's an ICO. VC, do you think you can make room for me? This is the kind of madness that happened, right? Because somebody had a token and a blockchain, they had like ridiculous valuations, right? So, and there was these ridiculous things like Yobit. They're openly announcing pumps. Somebody's going to pump the token in 21 minutes. Get into the pump. So we saw all kinds of madness like this. So there is a fundamental law called Amara's law, which basically states that we overestimate the importance of a technology in the short term while ignoring its true potential in the long term, right? So, like blockchain has massive potential in tokenization of assets, in the boundaries of organizations where organizations want to share data between organizations, right? But we overestimate its value today by just force-fitting a blockchain into use cases where there are no use cases, and then trying to raise money out of that. Are utility tokens dead? No, they're not. There are some real utility tokens with real value, some real assets, like, for example, Holochain, which is building a distributed computer and file storage, right? So there are a couple of use cases where there's a real use case of the utility token where the underlying asset has value and the tokens will appreciate in value organically. But 95% of these tokens do not have any value, right? And they'll go to zero. So are security tokens the next big thing? And I would say yes, because there is a real security behind the project, right? So what happens in a utility token? The investor has no right. The investor is not a shareholder, so he's a token holder. So if people raise money and they go buy Lamborghinis, right? There's nothing the investor can do. But today, in a security token offering, the shares of the company can be securitized. You can provide voting rights. You can provide liquidation rights. You can tokenize your assets, collateralize it on the blockchain, and then go and raise capital. Right? It's like traditional markets, like what people used to do before, with the convenience of liquidity, because these tokens are actually traded in the exchange, and the investor gets liquidity as and when he wants it. So this is the best of both worlds. You take the traditional token world, and then you combine that with the new world, which is the security token offering world, and hence the investor is incentivized. Right? So there's a big difference between the security and utility, as we saw. In the security token, there's an underlying ownership of the asset. You're tokenizing the asset, which can be the source code, assets of the company. You can trade a bond instrument. You can trade all kinds of financial instruments, right? Whereas in the traditional world, you only had access to the protocol, right? On Ethereum, you'd use the gas. For Bitcoin, you'd use it for mining or whatever. So investors in the security token expect real profit. Whereas in utility, our utility token purchases or people just looking for a pump and dump or whatever, right? I mean, it was really not a sort of sane investor who had a very sort of long-term view of it. In the security token offering, there are serious securities regulations, right? You have to be an accredited investor. You have to follow the security laws of the country. Whereas in the utility token, it was like the Wild West. Anybody can invest. Anybody can do whatever they want to do with the token. You could announce pumps. You can violate all kinds of securities laws of that country. So you see where I'm getting to, right? So the importance here is that there has to be proper legal structure for this industry to survive 2019. If not, this industry is going to die out. And the security token offering is the need of the hour because it actually brings in a proper regulatory framework. It brings in, laws of these countries where you're doing the STO. And hence, it actually makes sense for companies that are looking to raise money to do the STO. There are two types of STOs in fundamental, which is the share-like tokens where, you take your shares and, as I said, you pay dividends on the token, so on and so forth. Just like a staking reward or whatever, but you have tokens and then you have dividends on the token. And then you have the asset-backed token, which is like you have real-world asset where you tokenize art, which we keep hearing about, right? There are diamond mines that are tokenizing in Asia. There are gold-backed cryptocurrencies that have come out. So all of them are securities, but they're now masking as utility tokens, and they're raising money, but they're actual securities. So what is the main advantage between an ICO and an STO and an IPO? IPO is very expensive. It takes $1 to $2 million to do it. The lawyers make the money, the bankers make the money. You're left with very little of what you raise. Whereas an STO, you can still be a private limited company, and then you can use safe harbor exceptions of various countries. Like in America, you could do a private raise of your token sale on an STO. You can do private placements of your tokens and raise from accredited investors, right? So there are no middlemen because you're doing the sale yourself. You're having access to $2 billion, 2 billion unbanked people who, if they want to participate in the STO, they can. You have global access to markets, and you have programmable equity, where you have a new token standard called ERC 721, which is a security token offering standard, where it's a non-fungible token standard, where you can put in your sharefolio numbers, etc., and write smart contracts on top of that. So in the US, you have to comply to the securities laws. For accredited investors, it's called Reg D filing. So each country has its own securities laws. So this is why the STOs are complicated. Everybody talks about STOs. You keep hearing about it. Nobody's done it because they don't know what they're doing. There are less than 10 ICOs are actually live who've successfully raised, and we'll talk about them as well. So Reg A Plus, again, offers fundraise from non-accredited investors up to $50 million in the US. So tokenization gives you all these different benefits, right? You have fractionalization of larger assets. Like let's say you're doing I'll give you a real example. Somebody's building a massive IT project in Johor Bahru, right off the border in Malaysia. And they're raising money through a security token offering. And they're tokenizing the real estate, right? Whatever profits come in are paid as dividends on the token, on the security token, right? And they have real projections, they have real estimate of land, and so on and so forth. And it's a fractional ownership of that particular project that you get, right? You get a investment opportunity. Increased liquidity. The minute you do the STO, the tokens are traded, which basically means you have immediate liquidity. There's lower issuance fee, right? And there is greater market efficiency because of price discovery and all that. So these are the platforms that are available right now, but a lot of them are very American-centric. Like Polymath has a standard called ST20, which is very American-centric. Each country has its own securities laws. So when you raise money from different countries, you have to comply to the securities laws of those countries. So a lot of these platforms that are out there right now are not fully operational, are not fully capable of capturing all the nuances of security token offering today. But they're the good first versions of what is going to come. And these are the exchanges that are operational. There are very few exchanges that are operational today, right? And a lot of these exchanges do not have the liquidity. There are very few STOs in the market, and very few people are buying security tokens because, the various regulatory reasons. So existing tokenized securities, so blockchain capital raised, I think, $15 million. They're a VC fund. They raise the money through a security token offering to invest into startups, and they would pay dividends on the profits to the security token holders. Science blockchain, again, invests into hardcore science projects. So we are seeing a lot of these venture capitalists raising money on STOs. And then we have Gold USA, which is a gold-backed security token, right? So gold appreciation, gold trading, so on. So to put things on perspective, where we are, right? All the money in the world is $89 trillion. Stock markets alone are $66.8 trillion. If you take all the derivatives, it's about $350 trillion. Gold market cap is $8.2 trillion, right? Bitcoin is only $276 billion. Now it's gone down to $150 billion. And if you take all the cryptos put together, it's less than $400 billion. So if crypto has to really become mainstream, it has to follow the laws of the land. It has to be regulated. It cannot be the Wild West. And the only way it is going to happen is through complying to the securities laws of the country and creating these tokenized versions of those securities. Potential estimate is anywhere between $10 to $20 trillion over the next 10 years. This was a very optimistic estimate from Jan 2018. And the way the crypto market's going right now, I think it's going to take another 10 years before it gets to 10 trillion. So this is how the future will look like. This is my last slide. We'll have cryptocurrencies I think all these guys will exist in some form or some shape. We don't know what the price will be, but they don't have any real use cases, right? Bitcoin is a store of value. I mean, it's really not used as exchange of value today because of the fluctuations and so on. ETH, there are hardly any real-life use cases, very few DApps that are operational. So, I mean, Zcash, yeah, perhaps privacy reasons it might survive. But some of the protocol coins today might not really exist in another 5 years. Utility tokens, again, most of them have gone to zero or in the process of going to zero. So the real ones that will survive are real businesses and the real world having real-life impact on human beings. And they will be securitized, and there will be security token offerings. Thank you very much. Thanks for listening to me. Have a wonderful evening.
Thank you very much, Mr. Karthik.
Do we take questions?
Thank you very much.
Are we taking questions?
Are we taking questions? Are we taking any questions?
Any questions in the audience?
Does anyone have any questions for Mr. Karthik?
Somebody there. So it's American accent. Where are you from? What's your
Mike's
name?
coming out.
Hi, sorry. Okay, thank you. Yeah, so I had a small cap company that was listed on the OTCB.
What is your name and where are you from?
Oh, sorry. My name is Chris Simkowski. I'm here. We have a startup.
You're American? You've got an American accent.
I'm originally from the States, yes.
Right.
So we had a small cap company in the U.S. I'm very familiar with all the regulations in the SEC. One of the things that I like about ICOs that I'm very, very dubious of STOs having any value at all is the fact that ICOs were created specifically because the SEC overregulates everything. And I'll give you an example of that. As a small cap company listed on the OTCBB, we were trying to raise $500,000. Now, part of the agreement was that we had to file an S1 registration statement. This took 7 months for the SEC to approve and cost us $300,000 in legal fees to finally get it done. How do you guarantee that if you do an STO today, you're not going to get some over-anal SEC investigator that when you try and do something with it, you're going to wind up paying for a ridiculous amount?
There are two certainties in life. You know what they are? Death and taxes. Everything else is uncertain, right? So at the end of the day, the market is very efficient in pricing all these things, right? Whether you're doing small cap, whether you're building a technology company, there has to be real demand in the market. The problem with what we see today, 95% of the coins going to zero, is because there's no real-life use case. There was some science fiction on the white paper. When it came to executing, when it came to real-world needs, they're not really addressing those needs. And so I think it's very important for us to let the market decide. But I agree with what you're saying. There was a Der Spiegel article in a German newspaper on why Germany really industrialized and became a superpower, whereas the Brits were left behind, because the Germans did not have copyright law, whereas the British had a very strict copyright law, which didn't allow people to reproduce each other's works. In Germany, everybody was reading everybody else's work, mixing, matching, building new innovations. So this is a problem with large countries that we've seen progressively over many, many years or many decades. That as a country becomes large, it becomes less nimble. It becomes too, it becomes too strict, like we see with the SEC and all of that. But that's why I think there are countries like Singapore where the government is very pragmatic, the regulators are very pragmatic, which is why it's become like the Jerusalem of blockchain, right? Everybody's coming here because it's a very practical government, and I'm glad you're here as well. And I hope you'll consider doing an offering from Singapore. So.
Thanks for your time.
That's it? All right, thank you very, okay, one more, right here.
Hi, I'm Julius. I'm from all the way from Canada, Vancouver, Canada. And my question to you is, I just want to hear your thoughts on stablecoins. Will they be the next utility token?
Well, I think it's a very good question, right? I mean, the reason why stablecoins are picking up, there's a lot of interest is because of flight to safety. When you have a market crash that's happening, if you look at what's happening with Tether price or USDC or any of the other coins, people are moving to safety because they don't know what is going to happen to the market. I see a big trend in national governments issuing digital versions of their currency. The Swedish government is going to use the IOTA protocol to issue the e-krona. The Swedish currency is called the krona. And they're going to issue a digital version of the currency. You know, the blockchain was created to have a personal relationship between human beings and their money. It was created to remove all these intermediaries like banks, other financial institutions, all these intermediaries who are basically, you know, taking tons of money out of the system, right, out of the end user. So when you put your money on the blockchain and if you have your private key, then the only people who would be making money are the custodians. Is Tuhina here? Yes, Tuhina is right here. So she's going to make all the money because you don't need the banks. You just need the crypto custodians, right? So I think stable coins will exist, but I think government-backed cryptocurrencies are going to be the future because we believe in the government. We believe in the government of India. We believe in the government of Singapore. We believe in the United States. The dollar is supreme, right? So I think these countries, institutions with real economies, with real backings of the economy, those currencies will always survive. And all these other crypto experiments that we see are pegging things to the dollar or pegging things to, they're not really stable. If you peg to the dollar, you still have dollar volatility. You know, if you peg to gold, you still have gold volatility. You're not really solving the problem. And then the algorithmic backed, you know, like MakerDAO and things like that. I mean, that's almost science fiction. So we will see government-backed, government-issued, government-backed, fully regulated, KYC, AML compliant coins coming in the future, and I think that's the future. And these stable coins will slowly go away. That's my take on it.
Thank you.
All right, thank you very much. Have a good evening.